I always talk, I tip my cap to guys like you that do it out of state. I couldn't do it. I tell you, I don't know how you do it. Like not being in your backyard, it's difficult. And we tried it. I mean, a couple of years ago, we went to, it was like, we got to have a geographic diversity for our investors. Let's go to Atlanta. And I went out to Atlanta a ton, and we looked and chased a couple deals, got kind of close, and just realized it's too hard, and maybe back to, because we were in such a good market here at home. Like, I think what I learned in that exercise was every market's super competitive. So cap rates weren't any better. Returns didn't look any better. All was equivalent. Good, same thesis, B plus better assets, good locations. Like, it was all the same, but we didn't have any competitive advantage. And that distance was just made it incrementally more difficult than it was to just be here with, hey, I don't have to get on a plane. And I know these markets like the back of my hand. I know the players. I know that we've got all the systems built. So I think we kind of pivoted and said, rather than offer geographic diversity, try to cover a bunch of markets, like, we're laser focused. And that's kind of part of the message still, is like, Central Texas, born and raised, that's where you focus, period.
Yep. No, I think that makes sense. And that's probably a quote unquote competitive advantage to a degree, right? You're a local. So I think when an investor's speaking to you, you probably, whether you do it or not on purpose or subliminally, but they know investment, you guys, it's your backyard. And you're right. Cause when you're doing it out of state, there's a level of trust you just have to give up. And even if you're doing it in state, there's someone that's running the day to day, but it's a lot closer to home. So, that's probably something that, if it's apples to apples and you have to travel 2-3 hours to get there, what's the point? So I think that's, it's good to know that. And you guys went through the exercise and realized, hey, we might not have diversification geographically, but we do this really well, and this is our mission. So that's very defined and awesome.
Yeah.
Yeah, I think too many people that I've spoken to look to invest out of state because it's become almost like a popular term. If you're in New York and LA and you want to invest out of state or out of the area, I get it. But I know people that live in Texas, Florida, Tennessee, and they're looking in different locations because they can't, quote unquote, find a deal. And to me, that's always just been mind blowing. I've never really understood why that would be the case. And I think too often people use it as an excuse of, oh, my market's not good enough, so I can't find something. I'm going to go somewhere else. I think there has to be a larger emphasis on investing in your backyard, investing in your area, if it's the type of deals you're looking for. Like you said, the difference between Central Texas, Florida markets, Atlanta, markets in the Carolinas, there's only so much differences between them. Maybe there's some demand drivers, things like that. But if you live in Atlanta, yeah, maybe you would prefer a slightly different demand driver, a slightly different demographic. I think the benefit of being in your backyard probably outweighs some of the benefits of being in the other market that's maybe slightly more what you're looking for. The only difference I could see is if you were looking for, something that just cash flowed significantly better. So if you went to, a smaller Midwest state or up north or market, or you wanted a, top 5 MSA like New York, if that's what you were looking for. Otherwise, I think there's too great of an emphasis placed on out of state with a lot of people. Cool. So when you guys are looking at deals now with the pandemic and everything going on, has anything changed for you guys? Are you guys just kind of in a wait and see mode? Or do you think there's going to be some fundamental changes going forward?
We've certainly updated our underwriting criteria and kind of, backed off rent growth, added in some concessions, kind of our general thought is, and you got to put a stake in the ground somewhere. It's going to, we think it'll take maybe 2 or 3 years, to kind of get back to where we were, so Austin's been growing, 5, 6, 7% rent growth in places at times. Certainly back that off. And so we're going to get no rent growth this year, maybe a little bit next year. So changing some of the underwriting criteria, adding in some concessions for the next year, burning those off sort of next year. But I think we're not changing kind of the thesis, again, like B class areas, B class assets. There's still people moving here. I think one of the one of the things we're talking about a lot is it's certainly the pipeline, initially slowed down a ton, stopped just like everywhere else. There's been a few deals that have been out and about and kind of floated and have come our way where I think it did help to be local. They said, hey, we're kind of showing these to a few local groups. Travel wasn't an issue, all that sort of stuff where that has helped. But I think, as you look at and you see the anecdotal stories as well as sort of just some of the data showing, how this may accelerate, a lot of what was already happening with the inflow of population, the migration from the coast, people fleeing the Northeast. Is that going to accelerate, and are people going to move here at even quicker? I think we don't know, obviously, but I think there's a hypothesis that perhaps the population is going to grow even faster than it was, and that you look at I think as a market, multifamily, we fared very well compared to most of the other asset classes. I think multi and industrial have done the best. Offices struggled, retail's gotten killed, hospitality's dead. So multi looks really good right now. And then I think Central Texas and Austin and San Antonio's collections have done really well relative to a lot of the other markets. So if you stack both of those up, it feels like there's going to be a lot of competition and maybe even more capital trying to get into these cities. And if there's population, like it could make it even more competitive. So I think we're trying to be, we use the word opportunistic a lot, and kind of, hey, can we find something that we feel like works with some adjusted underwriting criteria? But is it in a good location that we believe in over the long haul? Still kind of is the driver.